Hey everyone, Ryan Finn here with the Finn Group, and today I want to talk to all of my first-time home buyers out there. We're getting a huge influx of buyers, and you know what? We get this question a lot. What are my costs as a first-time home buyer? So I thought I would do a little illustration today and break that down and see what it looks like. So you, the first-time home buyer, or maybe you've bought a house before but it's been a few years, can actually see what it looks like to purchase in this current market. And so what I like to do is I broke down, and it's a question around how much money do I need? All right, it's the basic question. So we jumped in, and I gave the example here of a first-time home buyer jumping into the market and looking for something at $200,000. It was a nice round number, and so we jumped in. We looked at possibly with a buyer getting an FHA loan, and when you get an FHA loan, you're going to have 3.5% down. So we broke this down, and 3.5% of your $200,000 purchase price is going to bring you to $7,000, and that's what you're going to need for your down payment. And I also have this slash mark earnest here, and you're like, earnest money? And when you make an offer, you're going to put down earnest money or money up front to the seller to show them you're serious about the house. Now, I put these two together because if we put, let's say, 1% down of the purchase price for earnest money, that's going to be $2,000, right? Well, that $2,000 is all together included with that $7,000. So again, at closing time, it'll be a total of $7,000 you will have put down on this house. That's your down payment and your earnest. Well, what happens after that? Now we've got to jump into, after we're under contract, we're going to have an inspection period, and you're going to inspect the house, and we're going to look at a lot of different things when we hire an inspector. We're going to look at the whole house. We're going to check for termites. We may inspect the chimney if there's a fireplace. Possibly if the house was built before the 80s, we're going to do a sewer scope. It's always great to do that. Those underlying issues that could be there, we have no idea about. Maybe the seller doesn't know about it. We're going to get an idea around that through our inspections. So we always recommend be ready for about $1,000 worth of inspections. That way you are prepared. After that, we're also going to have an appraisal on the house, and that's the bank verifying the value of the home that you're purchasing, and that usually runs around $500 there. So you're going to want to have that ready. You're going to write a check to your lender for that. And then at the end of this thing, and it's really fun, this is your favorite part, it's the closing day, right? Well, we're going to have closing costs on closing day, and you want to have about $5,000 ready for that at this purchase price. And you're like, well, closing costs, what do I get for closing costs? What is in that? Well, that's going to be your lender fees. That's going to be some of your title fees. It's also going to set up your escrow account. And what's in an escrow account? That's a prepaid account that we've got to get started ahead of time, that once a year you're going to have it padded by paying your payment, but we got to start it with this to have your insurance paid in full, your homeowner's insurance, and we're also going to have your taxes will be paid out of this account at the end of the year, and that'll allow you to keep your house, which is a good thing. So when we put all these numbers together, what does this look like? How much money do I really need, Ryan? Well, you need about $13,500 roughly to get into a home in this market. Now, there's some other things that we've got to look at as well on top of that $13,500, and you're like, wait, there's more? I'm like, yeah, there is more. There's a possibility in this current market we may have to offer over $200,000 on a home. And that's just because of the competition, and the market is being driven right now as it's a seller's market, and there's not a lot of homes actually available on the market. So what it looks like is we may have to pay $205,000 or $210,000 for this home. We want to make sure that you are ready to have extra money in your pocket should we need to go over asking. Now, do you need to bring all of that money in cash? Absolutely not, but a portion of it is definitely necessary. And what I usually recommend as a rule of thumb, if we were to go over by $10,000, let's say we were at a $210,000 price point, I would recommend having an extra $5,000 in there to be able to secure an appraisal shortage. Should there be one, we can assure the seller that you're still going to close on the house. And you're like, that's a lot, Ryan. That's a lot of money to have to save up. And that is the current market that we're at today. And if you go back a year ago or 2 years ago, that wasn't the case. However, to bring our buyers up to speed and be able to get them into the market, this is the process that we're educating on at this moment. We hope this is a benefit for you. Guys, if you have any other questions about this topic or maybe a different type of loan, we're happy to answer those questions or connect you with one of our preferred lenders. And if you have any other questions about real estate matters, please feel free to contact us at the information listed below. I'll be happy to discuss that with you. Again, I'm Ryan Finn with the Finn Group. I hope this has been helpful. We'll talk to you soon.